Here we go.
Are we good now,
We are.
Kim?
Yes.
All right, then. I will call the special meeting of council to order for August the 10th. And we have a request for decision on 2 items. And the first, you will see on the screen, 2.1, the QP contract. And I will ask Mr. Harrod to address council on this one.
Thank you, Your Worship. Really happy to be able to present this to council for approval. We've reviewed it with council in an in-camera session because it's a human resource issue. We've been, our management bargaining team has been meeting with the QP Local 1233 for a few months. It was delayed by the pandemic, by COVID-19. We got things back on track over the last few weeks with a few sessions with them. And we've been able to come to a tentative agreement that the local has approved. That's for a 3-year deal with increases in year 1 of 2%, year 2 of 2%, and in the 3rd year of 1.5%. The overall cost of the increase in year 1 is about $35,000, split between the water utility and the general operating fund, and certainly within the amounts that were included in the operating budget for both general and for water for the current year. The increases are certainly solid in the range of increases in other public sector settlements, and more importantly, from the town's point of view, the wages, the final wages, not the percentage increases, but the final wages will be paid to these members is very similar to that being paid in peer towns, we'll call them, such as New Glasgow, Bridgewater, Truro. So, Your Worship, the management bargaining team had recommended the acceptance of the contract to committee of the whole. It had been discussed on an in-camera basis, and now it's forwarded to council for approval, and it is recommended that council approve it. Before council does have that conversation, I just wanted to pass along our thanks and our appreciation to the leadership, the QP Local 1233, the President Matt Gould, and the bargaining team for the courtesy and the willingness to keep talking even when we hit little snags. We certainly appreciate that, and we certainly appreciate the work they do every day. Thank you, Your Worship.
Thank you very much. And I too would like to thank all of the town staff involved in their work in getting this on the table. I see Councillor Jones has a question.
Yes, Your Worship. Not so much a question as a statement. I myself would like to send out congratulations to the QP Local 1233 and the Town of Amherst bargaining team for their hard work in reaching common goals and coming up with this collective agreement that was acceptable to both parties. Therefore, I move that the council approve the collective agreement between the Town of Amherst and QP Local 1233 to March 31st, 2023. So moved.
Thank you very much. Is there someone who would like to second that motion?
I'll
second it.
Sorry, I heard Deputy Mayor Christie first. Thank you very much, Deputy Mayor. So we have a motion on the table. Are there any questions or further discussion on the motion? If not, then I will seek voting, and it will be nay votes, please. Hearing none, the motion passes unanimously. Thank you very much. Great job, everyone. The next item is the Amherst Ramblers contract. Mr. McDonald will address that. Sorry?
Your Worship, I'd like to declare a conflict.
Absolutely. Deputy Mayor Christie, thank you very much.
Yeah, Dave, same as me, Wayne McKenzie.
Thank you.
Step away too. Thank you.
All right. So that leaves us 4 voting members on this item, and that's still quorum, so we're okay. So, Mr. McDonald, do you want to introduce the recommendation?
I'd be happy to, Your Worship. Staff, myself, and Facilities Manager Corey Crocker met with Gary Brown from the Ambulance Ramblers when their contract expired, and given the uncertainties surrounding the COVID-19 pandemic, we mutually agreed that a one-year contract for this upcoming year would be most appropriate. The contract is almost identical to previous years. There is a 5% across the board increase in the fees that will be paid by the Ramblers to the town of Amherst, resulting in about $1,000 in additional revenue should the ice time be utilized. There are 3 clauses in the contract that were added regarding the COVID-19. One would allow the town to close the stadium with really no repercussions from the Ramblers. And the other one would allow the Ramblers not to utilize their ice time that they've agreed to use. Both issues would be, in the event of something, a resurgence of the pandemic. The third one, it requires the Ramblers to follow all the protocols and rules and regulations set forth by the province of Nova Scotia, the Chief Medical Officer of Health, or the town of Amherst to enforce the rules of the pandemic. And they would have to agree to abide by those rules. They are really the only changes, and staff have recommended to committee of the whole to approve the contract as it is submitted.
Thank you very much. Do we have any, someone willing to make the motion to accept this recommendation, please?
I'll
I
make the motion.
motion, Dave.
Councilor Reinders and a seconder? Is that
So
Councilor
moved.
Byrne? Seconding Councilor Byrne. Thank you very much. So there are 4 voting members on this issue, and I will seek nay votes, please. Hearing none, this motion passes unanimously with 4 yay votes. Thank you very much. And that brings the special meeting of council to an end. So I would seek a motion to adjourn, please.
So move, Counselor Jones.
Councilor Jones, thank you. A seconder?
Second.
Thank you very much. So the meeting is adjourned, and we will have about 5 minutes before we will move on to our next meeting.
So, Your Worship, as we're streaming and we can't interrupt, start and stop the stream on YouTube is going to continue as we wait to go into audit committee.
Do we need to wait, or can we begin audit committee?
We should wait. We have
Okay.
one citizen appointee who has indicated he is attending. And as soon as he comes into the waiting room, we can begin.
All right, thank you very much. So everybody be aware that any conversations are being live streamed.
Your Worship, I'm going to sign off. I don't think I'm required at the audit committee.
All right, well, thank you
They
for your
need
work.
my expertise, financial expertise. I'm not sure about that.
Yes, and you are on vacation now, so we appreciate your time. Thank you very much, Mr. McDonald.
You're welcome. Thanks for your support.
Thank you.
And Your Worship, Chief Jones, I'm going to log off as well.
All right, thank you, Chief. Appreciate your time.
We'll just give Citizen Brennan a few minutes to join.
Not a problem.
Is Rob Small joining us, Kim, or no?
No, he had to send regrets.
What's Mark Milner doing in the room?
I missed you.
Well, I went by your cottage, but you weren't home. Is that the cottage with the big do not enter sign, private driveway?
Well, that's sort of the next one past us. You're more than welcome to enter ours.
Well, I don't know. The big dog on the driveway.
You have to wear a mask, of course.
Getting much boating in, Mark?
0. Yada.
No boat?
Oh, no, it's there. just, I don't know, circumstances. Young 17-month-olds and this type of thing are not necessarily the best occupants.
Well, you and Jeannie have a 17-month-old?
We do. Actually 18, sorry. We have to behave, Vince.
I know.
So Mr. Brennan is just signing in now, your worship. So I believe we are all here that are coming. So we'd like to start.
All right, thank you very much. And so we can go ahead and I will call the meeting of the Audit Committee to order. And our first item is our agenda approval. So the agenda has been circulated and I would seek a motion to approve this agenda, please.
I'll approve.
Deputy Mayor Christie, seconding. Seconder, please.
I'll second it,
Second.
Mackenzie.
Councillor McKenzie, thank you very much. Minutes of our last meeting, February the 20th, were circulated. Has anyone detected any errors or omissions in those minutes? If not, I would seek a motion to approve the minutes, please.
So move.
Councillor
I'll
Reinders, thank you. Sorry, who seconded?
I did, Sheila.
Councillor or Deputy Mayor Christie, thank you very much. So we'll move on to our audit engagement and planning, and I'll call upon Mr. Milner to lead us through this, please.
Thank you very much. Kim, have you done some sharing for me? Or you?
Yes, I've shared the letter up on the screen. Do you not see it?
I do. No, I just, and that's great. So yeah, so that's great. So we'll just make our way through this segment of the agenda. It's great to be here today to have an opportunity to present the specifics that are related to this year's engagement. So what I have included within your package, and hoping you've all had an opportunity to review, are both the audit engagement letter as well as the planning letter. And these have been provided in relation to two separate engagements. The first being the audit of the overall consolidated financial statements for the town of Amherst, and the second being the specific audit of the non-consolidated financial statements solely of the water utility fund. This is consistent with all other years, of course, so I don't think this is new information. What I would like to do is just draw your attention to some of the highlights contained within these documents. And so really I'll do this in a manner of contrasting the nature of the two engagements, and we'll look at a few different things such as the basis of accounting that the two different engagements follow, the materiality levels that will be in play in relation to the two separate engagements. And at any point in time, should there be questions, by all means, I think it's appropriate simply to raise a hand and or ask the question as we proceed through the detail. So firstly, the overall audit of the consolidated financial statements for the town of Amherst. They are prepared, of course, using the rules of the public sector accounting standards. So those, of course, are specific to municipal units, or being a municipal unit makes you fall under that set of rules. And the other engagement, the non-consolidated financial statements for the water utility, they in fact are not according to public sector accounting standards, but yet they are according to a bit more specific set of rules, and that is the Nova Scotia Utility Review Board Regulatory Handbook. So very similar in some respects, but then as well, differences, of course. And in both cases, these two sets of guidelines are entirely tied into what we otherwise refer to as GAAP, or generally accepted accounting principles. So we draw from all areas when both looking at the overall accuracy and presentation and disclosure of the financial results for the year. Now, the two engagements are differing in size, definitely. So when we are doing our audit work and attempting to be able to provide for you a clean audit opinion indicating that there is no material misstatement, and therefore that the results are presented in good order. And in doing that work and arriving at those conclusions, we use a concept referred to as materiality. And so we need to establish that dollar level of materiality in both of these engagements. The consolidated engagement, as I mentioned, being the larger engagement, and it being based on, as a not-for-profit, based on rules that relate to revenue, using a 2% metric in arriving, when multiplied times total revenues, puts us in the vicinity of $350,000. Now, coincidentally, this level for the current year's audit that's being proposed is the very same level as the prior year. The overall revenue levels, despite their pieces being slightly different, they in total are consistent with the prior year. The water engagement, the non-consolidated financial statement materiality level, it as well is based on revenues, and that's consistent with the prior year. And this year's materiality level that we would follow within that engagement is proposed at $44,000. Now that's up slightly from the prior year, and it's up mainly due to the increase in the level of revenues in the current year being audited in comparison to the prior year. So those are some of the highlights. The engagement letter, as you can see, contains much detail. The content is consistent with prior years' engagements, but it just helps to spell out very appropriately the responsibilities that are borne both by myself and Jorgensen and Bickerton as independent auditor, and the audit committee and management on behalf of the town of Amherst. So you see right here in front of you now some of those responsibilities of management, and really what they boil down to is ensuring that the financial statements, which are the property of the town of Amherst, that in fact they, with the content that they have, that they present fairly, the overall position of the entity as of the end of the year. The other major responsibility that rests with management, of course, is ensuring that there is always an ongoing strong system of internal control. And so we know that's important because it's within such a system that we will have the best chance at the end of the year to have arrived at a clean, accurate presentation of the results for the town for the year. So many points within that letter. As I say, it goes on for a number of pages, certainly not the intent in this get together to go through all those pieces. I believe perhaps one item that may want to be discussed, this was an area of discussion in the prior year. When we do present or propose a materiality level calculated based on a revenue base, there is a factor that is important when we're looking at maybe some small differences which we have come across. And of course, when we would come across a difference in discussing what the appropriate action might be in relation to a smaller difference, there is a metric which we refer to as, or really a threshold, that is for those items that are clearly trivial. Now, that clearly trivial level in prior years has been set in and around $1,000. So it may be appropriate to establish, in fact, if there might be a slightly higher level that the organization would like to proceed with during this year's audit. When you look at the consolidated engagement and you look at the significant amount of revenue and you look at $1,000, it produces a decimal result that has many zeros in it. I think like 5 places, and perhaps it might be most appropriate if that trivial level were reached somewhat, just for administratively making making the discussion of small points a little easier to deal with. So I guess at this time, I'm not sure if there might be input perhaps on your behalf, Greg or Shelley, because it would be a differing metric from prior years.
Your worship.
Yes, Mr. Harrod, you want to respond to that, please?
Just a request for maybe a little information, Mark. What's a similar? What would a similar? What's your experience in similar sorts of engagements for that level?
Well, I'm just for me, I'm looking at the percentage points that are involved, using that very low $1,000 level puts us at about a 0.0005 or something like this. And at least if we were to place it even at the $5,000 level, perhaps, that takes us up to just a more logical place, something like a 0.03% when I was looking at a few numbers. So, and I know that this was an area of discussion in a prior year audit. So I thought we should perhaps arrive at a decision on that.
Okay. I see Deputy Mayor Christie has her hand up for a question.
Hi, Mark. I
Hi.
was going to ask something similar to what Greg had, but I'm a little uncomfortable with 5,000. I think, I guess in your experience, how often are you coming across the $1,000 and under, or that range? Like, are we talking 20 or 30 things? Are you talking many? Like, I just am uncomfortable with going much higher than that, but I was just wondering.
Sure.
From your experience, yeah.
Yeah, I find from my experience and from past audit experiences with clients that we set this trivial limit. However, many times it seems to be the wish or the intent to have the statements to be as accurate as they can be. So if there is perhaps something smaller, even though we discuss and talk about a trivial threshold, many times we'll find ourselves making that adjustment. That has been my experience with Greg and Shelley in the past. So I think what it would do, though, it's not about, and keep in mind too, that if you had so many trivial pieces that added up to a significant amount, by no means would they be dismissed. There would be a revisiting and looking at the overall combined result of those. So it's not a method by which perhaps there could be very many differences just simply dispelled. That they always would be fully discussed. And
So when you say that when you come across something that's in that range, that you have a discussion with Greg and Shelley, and then you make the adjustment, I guess it gives an opportunity for people to look at what might have caused the issue, rather than it just being a dismissal.
no, exactly. And that to your point is always the case. You know, if perhaps I'll just pick an example. If perhaps we were doing some audit work on some accruals, perhaps in and around payroll, and we might be doing some specific calculations and say, oh, you know, maybe according to policy, we should be here with this result. And it always prompts, as you say, an opportunity to look at the underlying circumstance, and then if necessary, then proceed and ensure that over the coming months that there be a tweak or a change to the system.
Right.
In that
Okay.
area.
Thank you for that. But based on that, I'm willing to leave it at the 1,000 is my personal opinion, but thank you.
Okay.
Thank you. I see Councillor Jones has a question. Councillor Jones? I'm afraid I'm not hearing anything. Is it my end that's the problem, or Councillor Jones?
I don't see him at all.
No, your worship, he seems to be having trouble. I'm going to text him. He seems to have a frozen screen, so.
Oh, is he? Okay. I just saw that his hand was up.
Yeah,
There he is.
I'm always freezing up here.
Okay. A little warm to be freezing up there, Councillor Jones.
Well, air conditioning. Oh, Mark, I just had 3 questions for you. I was going to save it till the end, but I'll jump in now. Not to do with the $1,000 thing, but how long has Jordan Bricken been doing the audit for the town of Amherst?
I don't know that I can answer that question. Myself personally, I've been involved for, I guess, 5 years. And prior to that, I'd have to do some research.
I can jump in and say that it's about 25 years. I've been here 23, and I think the change happened a year or two before I came.
Okay, that's great to know. Mark, do I understand correctly that the audit for the town of Amherst will cost roughly around $350,000?
No. What we're referring to here today, when we're discussing materiality, we are talking about a metric that is used throughout the procedures that are used when we conduct the audit. And it's also an important threshold that is used. And let me back up even again. So definition of materiality for everyone on the call is materiality means that if we look at the results for the consolidated entity of the town of Amherst, and if there should be an error that should exceed that materiality level, then we would say that that level of misstatement that might exist within the statements is large enough that it would impact decisions being made by the users of the financial statements. So when we do audit procedures, we may find perhaps in testing in one area that there may be a small difference noted, and it may be at a difference that might increase the revenues of the town. In another area, we might find an equal and opposite difference, which might reduce. And so what we do is look at the overall combined impact to the extent that we might find differences. And it's not that, and when we talk about differences, I don't want to mislead. It's ultimately, we may find that in our testing, there's an item that we discuss, and there's some difference, but it certainly is also the case that when we're doing testing, there are no differences whatsoever that are noted. It's just that in the event that there are differences, they are documented and they are accumulated, and we have this mechanism that is utilized as a standard part of auditing. So no, it has nothing to do with the cost of conducting the audit for the organization.
Right, thank you for the clarification on that, Mark. Actually, you answered my second question too. That applies the same for the town of Amherst water utility thing.
Yes. Yeah.
Okay, thank you.
Okay, you're welcome.
Thank you.
So I guess at this point, having heard some input from a couple of the members, I mean, this decision, as what a trivial difference definition may be, it need not be, I don't believe, part of this presentation today, where we're telling you about the steps in planning and the engagement, but it can be something that could be determined shortly as the audit gets underway.
So you're not looking for a motion to necessarily to leave it at 1,000 or change it somehow based on council discussion?
Well, if we could get to that place, that would be probably the ideal. But if it's not possible, then there would need to be further discussion.
Right. So you've recommended $5,000, and Deputy Mayor Christie's recommendation is leave it at 1,000.
Right.
And
Mine is simply presenting an alternative. 5,000 is, when you look at what a small piece that is of your overall total resource that we're auditing, it's still quite small. It may be that the group might, in fact, feel that perhaps a number like $2,500 might be appropriate or palatable.
Your worship.
Okay, so yes, Mr. Harrod.
So look, we weren't prepared for, staff weren't prepared for this conversation. We didn't know this was coming. So we'd like to have an opportunity to do a little bit of a survey of other municipalities and see what the normal trivial amount would be in municipalities of a similar size, and provide that information to council so they could make a decision, to the audit committee so they can make a decision based on, you know, a little bit more information, if that was all right.
And I would just say entirely, I guess not my intent to, I guess, lead into this discussion. It was more of a presenting a point. So, and as I've mentioned, absolutely, probably a decision to arrive at after a little bit more research, and I can help share in that decision making.
Okay, well, that certainly clarifies it. We'll leave that one alone and let the town staff do a little looking into that to see whether or not they want to make a recommendation to council. Fair enough. Thank you. Are you
I think that, sorry, I believe that I have covered the high points of the two parts of the agenda that are before you today.
Okay. Does anyone have any further questions for Mr. Milner?
No, I just had a question there. I couldn't get in there, Dave.
Councillor Reinders, go ahead.
I was going to suggest that we have another meeting. We get our CAO look into it, because I was going to just ask 2,500, but then I said we should look at it because we just got the material today, and get council look at it and get more input in it.
Yeah, I think that's pretty much what we've decided. So thank you. We'll leave it in the hands of Mr. Harrod and his staff. Thank you.
Excuse me.
All right. So, Mr. Milner, that completes your presentation then?
Yes.
All right. Thank you very much for your time and that presentation. So that moves us to our next item, fourth quarter report, and that I will ask Shelley Rector to address, please.
Thank you, Your Worship. So today I'm going to walk through the fourth quarter report. So everyone received a copy in the package. And just a reminder that this is our second year doing a fourth quarter report. And our intent when we started doing the fourth quarter report was to provide information to the audit committee that would help with understanding the financial results once we do the consolidated statement. So this is kind of a, here's where we are based on the unaudited statements. And then when we get to the audited consolidated statements, we can kind of do a crossover between the two. And so just a reminder that we do consolidation entries and adjustments to reserves to move the surpluses. That is part of our requirement in our reporting structure. So that would allow me to show you when the consolidated statements come, what's different from here to there. So if we go to page 2, which is up in front of you now, which is page 28 of the package. So this is really a table of contents that outlines what's in the report. It shows you the organizational structure and all the different schedules that are part of the fourth quarter report. So then we'll go to page 3, which is page 29 of the package. So this is the organizational structure of the town as of March 31st, 2020. You will note there's been a few changes that have happened this year. And so that just gives you a visual representation of those changes. And then if we go to page 4, which is page 30 of the agenda package, it gives you a visual of the results for the fourth quarter. So it shows you that the town's general operating fund has a surplus of $191,005 when comparing actuals to budget. So we've identified that we identified in third quarter that we thought we were going to have an overall surplus of $211,000.86. And so I'm just going to do a quick summary of the differences between the forecast and what we're actually at the fourth quarter. So we decreased our surplus by $49,500 in valuation allowance. So our valuation allowance went up this year by $49,500 to account for potential uncollectible accounts. We decreased our surplus by $22,000 for unplanned natural gas repair at the stadium. We decreased it by an additional $10,000 in salt. So we spent more on salt than we anticipated we would. And the remaining $18,000 difference between where we are at fourth quarter and when we forecasted at third quarter was $18,000 due to wages and accruals. But this is offset a bit by having a higher than anticipated surplus in sewer. So it was about $43,000 more than we anticipated due to an under budget in most areas in the sewer. Our solid waste was about $6,000 higher surplus than we forecasted due to tipping fees being under budget. And then $18,000 less than forecasted for this community support area rate as our events were under budget and our grant funds were not fully spent, so including our property. So that's just to give you a quick glimpse of the difference between our forecast and our fourth quarter. So if you go to page 5, page 5 is the schedule that actually shows you the general operating fund by the different categories and what the variances are. And so I'm just going to do a walkthrough of this information in this schedule. So our general revenues were $17,540,209, and it's compared to a budget of $16,671,426. So that provides the town with $131,217 less in revenue. So revenue is less than we had budgeted for. And I'm going to note just in general as I go through these things, there are some smaller fluctuations in different areas, and some a little over and some a little higher. And I'm not going to go into that level of detail. I'm going to try to provide you with the main areas, or the ones that are most significant. So if you look at your taxes, D-transfer was less than anticipated by about $21,300. It was offset by heritage gas taxes being $29,300 higher than we anticipated, and the HST offset being $7,900 higher than anticipated. So overall, that's giving us $22,711 more revenue for taxes. So in our grants in lieu of taxes, you'll see that we have $9,943 more than budget. And that was due to the Nova Scotia Liquor Commission building. We had only budgeted for half a year because we thought they would probably sell that building. And it didn't get sold. So the next one is the sales of service. So the town sales of service were $56,127 under the budgeted amounts. So you'll see that's the fourth line down. This was due to the wind turbine was producing less wind. We had talked about this at third quarter. So there were some maintenance issues there. And so that was about $29,300. And our criminal records was less than we had anticipated by about $28,500. We had a lull in one of our contracts. So we lost about $28,500 there. So the next item is the revenue from own source. Was actually up by about $9,000. So we were over budget in investment income about $44,000 and about $20,000 in interest on our outstanding taxes, but that was offset by being under budget in special event revenue of $18,000 and $10,000 in building permits, and also about $20,000 in unsightly. And I'll note now that $20,000 in unsightly was offset by an expenditure savings on the other side. So we got less revenue, but we also spent less money on the other side. So. Number 5 is conditional transfers are under budget by $15,056 as a result of the $38,200 for tourism grant that was not received, but it was offset because we received the $13,300 for PACE, and we also got $8,700 for the physician recruitment. So that's where that $15,000 comes from. And finally, our other transfers were under budget by $101,862. And you'll recall that we talked about this before. In keeping with other years, we only transfer from reserves if we actually need the funds, if we're going to be in a position where we need the funds to avoid being in a deficit. And so, for example, we didn't transfer funding for the summer student. We didn't transfer the money for the crusher dust at Rob's because we were able to pay for those out of our operating funds. So that gives a total of $131,217 under budget for revenue. I'm going to continue on. If you have questions, please feel free. I will check in after each of the presentations of the schedules to see if there's anything additional people want to talk about. So let's look at expenditures. So if we look at wages and benefits, you'll see that they're actually over budget by $78,675. And they're somewhat offset through cost recoveries below, which we'll talk about in a few minutes. So overall wages are over budget by $153,000. 137 is police, and they have cost recovery to offset some of that. The benefits are under by $82,000. So that's due to vacancies, new employees that weren't eligible yet to start their benefits and that type of thing. And we had a year-end wage and benefit accrual that was over by about 12,000, as there were 12 additional days to accrue this year. So the next one is administrative costs. So they're under budget by $99,834. And there's various GLs that are under budget, but the most significant amounts, again, are promotion, which is $28,000 under budget, travel, which is about $14,000 under budget, conferences, which were $14,000 under budget, and advertising, about $10,000 under budget. The next one is building and facility costs. They're over budget by $12,000, and that's mainly due to the natural gas repair. It was offset with a few smaller amounts that were under budget, because that repair was about $33,000, but we ended up with a $12,000 overage. Next one is vehicle and equipment costs. The vehicle and equipment costs are under budget by about $60,000. Most of the GLs in this category are actually under budget. And so the most significant is gas is about $10,000, insurance $11,000, and rental is about $9,000. And then there's a bunch of other smaller ones that add up to the $60,000. Materials and supplies is over budget by $23,000. This is due to higher than budgeted costs for salt. So this is the one that's over budget. It's due to the salt. We used more salt than we had anticipated. The next one is grants to organization. It's under budget by $37,641. This comes from the Fresh Start. There was $19,000 not used. Grants had $11,000 not used, and the poverty was $17,000. I do note that the amount for the poverty, in keeping with prior years, would be moved to special reserve for future use. And then other municipal costs are under budget by $115,620. This comes from $11,000 for community events, uniforms of $11,000, strategic projects of $45,000, and ordered remediation of $20K, which I mentioned earlier about the revenue. Fiscal services are over budget by $100,000. This is due to higher than budgeted amounts for the allowance for uncollectible accounts, which is about $49,000. We've had a phase in commercial assessments, so some of those came to fruition this year, and that was $33,000. Loss on assessment appeals of $19,000, and the housing of $18,000, which we talked about at third quarter. So this was offset by a little bit less for our debenture interest, about $10,000, our accrual for the debenture interest. The next one is tax exemptions. So I think we talked about this at third quarter, but I just want to highlight it again. Tax exemptions were more than budget by about 11,700, and that's because we had more applications than we anticipated. And so we granted 92 applications this year, and we had budgeted for 66. So more people taking advantage of that. And finally, our process recoveries were $235,946 higher than budgeted for. And so we've talked about this before, but I just want to remind everybody that these amounts are difficult for us to budget for. They're a bit of the unknown, and so we tend to budget very conservatively. So they actually would increase our surplus. 90,000 of it was short-term disability, workers' comp, which offset some of the wages from above. You know, we said the wages were over a bit. We had a crime and task force recovery of $39,000 that we put on in training here and recovered costs from other people who participated in it. We had $12,000 from the solid waste consulting study we talked about at third quarter, and various other grant amounts that we had received, so from recreation. So this results in our expenditures being $322,222 positive, less than what we had budgeted. And so that results in an overall surplus of $191,005. And so in keeping with what we did last year, we've also provided you with a summary at the bottom of the page that shows it based on the way we did our budgets, so based on the way we did our rates. And so sewage has a $45,842 surplus. The solid waste has a $6,815 surplus. Community support area rate has a $47,518 surplus. And the general operating has a $98,830 surplus. So anybody have any questions yet, or can I move to the next page? Okay, and we'll move to page 6 of the report, which is page 32 of the agenda package. So this shows the same information that I just presented. That was by category. Now this is by department. And so in this case, rather than giving you the same kind of information, I'm really just going to focus on a few main ones. So the budgets, or all of the departments, were under budget with the exception of operations. And this was mainly due to the salt being over budget and the vacation overtime accruals increasing by $16,000. Those were the only two factors there. So you'll note that recreation and sewer are under budget by a significant amount. So I'm just going to review those two as well. So recreation was under budget by $101,588, and the majority of that is from wages and benefits. So there was about $70,000 from vacant positions, savings on benefits and pensions with new employees coming in. There was a bit of a lag between when one person left and the other people came. So there was those amounts were about $70,000 of that $101,000. And in sewer, there was no one area that contributed to being under budget by the $71,000. There was a few areas, consistently across that were under budget. And then finally, we note that housing was $18,767 over budget, which we mentioned again at third quarter. So that's the information on the general government. So I'm going to move to the town water utility.
Shelley,
Before you do, I see Deputy Mayor Christie has her hand up.
Shelley, I'm
ahead.
just wondering if you could send us kind of that little summary that you just went through line by line, because we do talk about them every quarter, but it's hard when I'm going back and looking at my previous documents, just when we're having a verbal kind of line by line what they are, to kind of remember and try to make notes as we go through. And it's a little bit harder when we're on Zoom than when we're in a room and kind of can talk about it and make notes on the paper and that sort of stuff. So is there a way you could just do a little summary of what you just went through as far as those hard ones that you summarized, so I can put it with my package to remind myself when we're looking at these numbers again?
Sure, I can do that.
Okay, thank you very much.
I can provide the information and an information memorandum and send it to.
Perfect, thank you.
Welcome. So the water utility, that's page 7, which is page 33 of the package. And so the utility is reporting a surplus of $4,685. And so of note, the sales of services is higher than budgeted by $11,477. That's due to some new connections. Metered sales are under budget by $31,105, and that appears to be a decrease in consumption, maybe water conservation. So that results in overall revenue being about $19,624 less than budgeted for. The wages and benefits are over budget by $28,087. This is due to overtime and vacation premium of $19,000, as well as an $18,000 vacation accrual adjustment. These are offset by other items being under budget. The administrative costs are $21,897 under budget, and that's mainly due to a decrease in software licensing of $9,000, liability claims of $7,000, and travel of $3,000. The next three are also under budget. The building and facility costs is mainly due to the electrical. The others are just small amounts that are under budget, different line items. The next one I'd like to highlight is the other municipal costs, which are under budget by $28,426. And this is a professional services that we budgeted for, but we didn't actually need to utilize. Fiscal services are over budget. And so this is still subject to council approval, and in keeping with prior year's practices, we would increase the capital out of revenue of $74,000 to offset additional capital out of revenue of $74,000 to pay for some of the capital projects that we have rather than borrowing. And this is offset somewhat with interest accrual adjustments of $14,000 and depreciation of $19,000. This results in the expenditures being under budget by about $24,000. And that results together in a surplus of $4,685. And that's the water utility. So the next pages show our capital budget. So those are pages 8 and 11 of the report, and page 34 to 37 of the package. So I'm just going to, we've reviewed it quite a bit in third quarter, and we've brought things up to council as they've come up. So I'm going to highlight a few items. I'm going to note that in the water utility, you'll see that there's some design work that was added in. The work was done as a work in progress for projects that are in this year's capital budget. So there's no capital amount attached to those. So those make it appear like the water utilities capital is over budget, but they're really just work in progress amounts that will be funded in our capital budget going forward. So if we look at the cost of our equipment, so the equipment budget is about $52,000 over. And that's due to the ice crusher salt spreader that we purchased. And so if you'll remember that we took the Anson project and funded it through gas tax and used the capital out of revenue that was supposed to be for Anson to fund this project. That was done through an approval of council. The building and lands, if you include the carryover, it's under budget, and that's mainly due to savings of the roof repair at the Community Credit Union Business Innovation Center. It came in less expensive than we had anticipated. The next one is the large project, which is Willow Street, which came in under budget. So that meant that we had to borrow less to fund our portion of that project. And you'll note that we were over budget on our streets, but that overage is more than offset by the savings that we've had in the sidewalks. And both of those categories are funded through our gas tax. So that leaves us with additional gas tax for the future. We were under budget by about $9,700 in our sewer projects. The next one is the fire department. So they're under budget by about $23,000, mostly due to the floor coating and the truck both coming in under budget. The unit number 7 truck. I do want to note that the fire truck has been ordered, but didn't come in yet, and so we're still waiting that. At year end, it wasn't here. The police department is under budget by about $25,000 in capital due to body armor and the acoustic panels, and Mike's being under budget. And recreation was under budget by about $61,000. So that kind of gives you a sense of where things are at the end of fourth quarter. If there are any questions, I'd be happy to answer them.
Thank you very much, Shelley. I don't see anyone raising their hand, and I gather there's no questions, so you can continue. Oh, Councillor, I just see a hand went up. Councillor Jones, please. We're having a problem with Counselor Jones' connection again.
Can't hear you, Daryl.
His connection be an issue again because he's not showing being muted. Now his hand's gone down, so. Counselor Jones, are you with us? Not hearing a response. Kim, do you have to bring him back in? Well, I guess we can, Shelley, why don't you continue and we can come back to Counselor Jones when he gets his connection reestablished.
So the next item, we're going to move to the next item on the agenda, which is
Oh, wait, here's Counselor Jones.
Can we get me now?
Yeah, I got you now. Do you have a question for Shelley?
Yes, I did for the recreation department. Dickey Park Field Development. There's a budget 47,000. Why did we take 24,000 out of that their budget? You refresh my memory?
So,
Last-
are you talking about the goalposts and nets?
Yes.
So when we put the amount in the 47, that's what we anticipated them to cost, and we did get goalposts and nests, and they came in at 23,000.
Okay, thank you.
Welcome.
Good.
That's great then, thank you. All right, Shelley, if you'll continue on now then.
Sure. So as council will recall, we every year we get the financial condition indicators. They come almost into the next year. So this is for year ended March 31st, 2019. So last year's results. And I wanted to present the information to council for your information, just to say what's going on. We did a very detailed presentation last year just to explain the different components, et cetera. The results are very similar this year, so I'm not going to go through as much detail as I did last year. I do want to note that there's an error in my memo. It should say, in calculating our FCIs, it's worth noting the numbers used for the report and net of the town's contribution to education, corrections, housing, and not including CJSMA. So that is an error in the memo. It should say, and do not include CJSMA. You can see I did present the house from this year and also the house from last year, just to show council or the audit committee that the green and reds are the same as they were last year. So although some of the numbers have changed, the 10.4 versus versus 10.7, for example, there is no significant change in our percentages or in our ratings. And so I'll remind everyone that green means that you're low risk, yellow means that you're moderate risk, and red is an indicator of higher risk. And so overall as a town, we are green. We are one of 7 towns this year that are green. That's a good thing for Amherst. So the report highlights our successes in the areas of liquidity, prudent debt levels, strong operating reserve, effective tax collection, and asset management. And so probably the 2 areas where we still have the red are capital reserves and budget accuracy. And so I know that the budget accuracy is because we actually had surpluses, not because we had deficits. So we actually had more than we had budgeted for. And so they still use that as a way to, they want you to have none of that either within 5% of your budget. So we show surpluses. The surpluses have been used to pay for capital investments in our infrastructure and our assets. And so if you look at our asset, undepreciated assets, we're at 59.5%. That's very high in comparison to the other towns. So that's a good thing. And that's what we're doing, is taking our money and investing in our infrastructure and our capital. So again, I think that indicates prudent financial management. We talked before about part of our success is that we have strong management around finances, and that we have our 10-year operating projections and our 10-year capital investment plan. So that allows us to take advantage of opportunities that may come up from a financing perspective. We also have a very strong collection. We do very well in the collection side of things. I also provided in the package comparisons of us to the larger towns or the peer towns. And so we score quite favorably in that regards. So we have overall rating of green, while 2 of the towns have yellow and 2 of them have red. And the same with our comparison to Cumberland. We are in the overall green, and both the other municipalities are red. So that's very positive. There is a provincial municipal report that kind of gives context and information about our community, et cetera, which I will have sent it to the audit committee after the meeting. And if you have questions about that, please feel free to reach out. Any questions on this stuff?
Yeah, I've got one, Your Worship.
Yeah, go ahead, Deputy Mayor Christie.
Just a couple things, Shelley. So the 2 comparisons you have, they're both labeled 2018-19. So the second one on page 39 should be
17.
Okay, 17-18. And I totally understand the combined reserves issue, but the 5-year budget accuracy, like, I'm just a little confused on that part, why it would be red.
Because the province in there, it's not necessarily something that we 100% agree on, but when they do their analysis, if you have a surplus, that's considered not to be budget accurate.
Okay, so reserves versus surplus, they're still gonna make you red regardless, even though you're doing a good job.
Right.
Okay. All right.
Yeah,
Is there appeal process at all for that, or no?
No.
We pushed back pretty hard on some of this, on some of the definitions. We pushed back pretty hard, particularly on this, not only after things have been released, but when these metrics were being developed and then when they were being changed. It was a few years ago, they changed a bunch of them, really without much consultation. And so we kind of pushed back, but no avail. That one in particular is really frustrating for a municipality like ours that has consistent surpluses. There's just an absolute number. They don't take into account whether it's a surplus or a deficit. You would think that a budget problem would be someone who is an organization that was consistently over budget.
Yeah.
And we're the other way, and
Yeah.
but we still get nailed with it. So it's not one we lose a whole lot of sleep over, to be honest, other than the fact that it's red and nobody likes red.
Right. Okay. But I think overall it's a very good report. But just to understand what the differences are for those numbers. Okay. Thank you.
Welcome. Thank you. That's the end of my information.
Very good, Shelley.
Councillor Jones?
You're muted.
He's muted. Yeah. There we go.
I had to change my headset. I think the battery must have died in it. Shelley, thank you for your report. It was very interesting. Thank you once again.
You're welcome. My pleasure.
All right, anything else? No other questions on this? Okay, well, that brings us to the end of our agenda. Thank you very much, and I'd seek a motion to adjourn this meeting.
So moved.
So moved.
Thank you very much, and thank you all in our, to Mark Milner and to Shelley and all of your crew. Thank you very much. Looks like you're doing a wonderful job, and we appreciate that and recognize that. So thank you very much. And I will, sorry?
I said, thank you, Your Worship.
Oh, okay, sorry. So with that, I